Welcome to the Show Me the Money podcast, Unlocking Property Finance. Join us on an exciting journey into the world of property finance, where we uncover secrets, strategies, and opportunities that can turn your property dreams into a lucrative reality. Welcome to Show Me the Money, Unlocking Property Finance.
Hi, everybody. Welcome back to another episode of Show Me the Money, Unlocking Property Finance. And for our new listeners, hosted by myself, Rose Sharma. I'm a London-based property investor and developer. I work with site and landowners on joint ventures, and I work with investors to give them solid returns on their investments. And obviously, co-hosted by Mark Champ.
Hi, everybody. If you don't know, I'm a property finance broker. Also do a little bit of trading business finance as well. Based in Essex, cover the whole of the UK. And looking to really help people understand property finance and ensure that they're making sound investments in the property world. So keen to talk to people.
So today we decided we'd give our listeners a market update. The last time we did one of those was in early December. And I think there's probably been a few changes. Obviously, we've all been watching interest rates, Bank of England based rates, and some of the announcements made by lenders. But Mark, this is very much your domain. So since we last caught up, what's been happening in the world of property finance?
Well, it's got busy. I think I said in December that September, October, November were quiet months, very quiet. The increases in the base rate had really hit the market, and there was a lull in activity. December picked up a bit, but January has been on fire. There's so many people looking for property investments, new people trying to get into the market, people coming back into the market. And there's because the house prices have not really gone up too much, but the availability of capital it's become a market where it's not a buyer's market, but there are becoming a lot more opportunities out there. And that is everything from people buying land to converting terrace housing to HMOs, commercial conversions, all the strategies we're seeing. And there's been a multitude of different applications coming our way that we're going through. And I think it's been a really interesting time, because as the rates with lenders have come down, obviously base rate has stayed the same, but the rates with lenders have come down, and inflation has come down from the peak a few months back. But I think the interesting question that needs to be posed is what is actually causing inflation and what can curtail inflation, because people for years have believed that interest rates are the main way that you can control what inflation does. But now we're seeing, I think, more macroeconomics changing inflation than interest rates themselves. I don't know what your thoughts are on that, right?
Yeah, I mean, when we look at the reaction of the Bank of England, typically raising interest rates has been there as a tool really to sort of curtail demand. But I think actually a lot of our inflation has been sort of supply-led inflation rather than demand pulled inflation. So it's not always, not always the only or the right way to tackle with it, or to tackle the situation. However, as you said, all the other macro factors, wage growth, cost of services, we look at GDP, there's so many other factors, and there's a lot of other things happening in the world. But I guess, from my viewpoint, a lot of that instability or uncertainty was priced in a long time ago. If we wind back the clock to sort of 12, 18 months, really kind of kicked off with Ukraine, I guess. But there's far less uncertainty on the horizon now, or certainly in the view of investors, and that's obviously been reflected in swap rates, I guess, which we've seen on a nice steady downward trajectory since December, which has been guiding some of those lenders' rates. So what have you been seeing with borrowing rates? Let's start with term mortgages first, because there's definitely been some noise about some of the changes we've seen there.
Yeah, so we've seen quite a lot of rates drop, and most lenders have dropped their rates from, say, high fives to high fours now. You're
Okay.
getting some just creeping into the 4.9% on your 5-year fixes with either a 2 or a 3-year arrangement fee. And HMOs have come down, and there's more lenders competing at that space now, where there were only a couple, well, a few more than a couple, a few months ago. Lenders who weren't lending at all come back in, and other lenders, where there's a big gap is on the commercial front. So
Right.
commercial property and semi-commercial, there's less lenders who will lend in that space, and it's always been a bit of an issue trying to find the lenders there. But Shawbrook have reduced their minimum borrowing for commercial, and Interbay have as well. Because if you go back 2 years, Shawbrook and Interbay were the two main lenders you would go to for commercial, and they increased their minimum borrowing on commercial quite dramatically. And now it's come back down. It gives the customer a bit more choice, and there are more exits if people are doing commercial conversions. So yeah, rates across the board have really come down. Buy-to-let, HMOs, bridging has stayed similar. We've not really seen bridging come down too much. Maybe very, very small levels, but nothing dramatic. And I think it's not really been the same level of reductions that we've seen for the longer term mortgages.
What about leverage then? Because obviously you've got rates is one part of it, but then the amount you can actually borrow in terms of loan to cost or loan to GDV.
Yeah, leverage has stayed the same, really. We've got a couple of lenders who have been a bit punchy. Castle Trust up there, they've got some new products on the market which have been interesting. But yeah, leverage, I don't think it's changed too much. It's still where it is, because whatever the market, it's still loan to value, and the value moves up and down. So
Yeah.
you don't really need to move it. And that's one of the things that I always wonder when there are issues in the market. You see some lenders go, "Oh, we're cutting our loan to value," but why are you cutting your loan to value? Because the value is going down. You're going to be lending less anyway. So
Yeah.
I've never understood that, and I'm happy to be corrected and given a lesson on that. But I just don't understand it. And we had a deal. Just trying to think back now. We had a transaction, and there was an issue with the property, and the lender said to us, "Right, we're going to cut the loan to value." And I'm like, "Why are you cutting the loan to value?" It was comments by the valuer about demand for the property. I'm like, "But the value has already factored in that there's low demand for the property. So why are you cutting the loan to value?" It just
That's a
doesn't make
great point.
sense.
Yeah.
But they do it. It's pointless.
Hopefully we've got a few lenders listening to this who might want to do something about that. Because conversely, there were a number of lenders that were offering like 80%, even more than 80%, going back a little bit further on buy-to-let mortgages. But also happened to be the lenders that tended to be a bit more cautious with valuation instructions and valuations anyway. So even if you thought you were getting 80%, it's probably going to be on a lower value than you might get with a lender who's going to lend 75% on a higher value. So,
and also, I'm not saying it happened, but sometimes it's alleged that lenders speak to the valuers and have chats with them about the value and where that value should go. I don't think it's any of the lenders that I use, but yeah, they don't want the value to be too high, because that's obviously more risk for them. But I think at the end of the day, the valuers have PI cover, and they have their qualifications that they have to make sure they're doing things in the right way. So everybody does need to be cautious when it comes to actually valuing properties, but the loan to value covenants are in there for a reason. And I wish they weren't cut when there's no need to cut them.
So which lenders have you seen sort of the biggest changes with? Sort of starting with HMOs, for example, HMOs and the typical sort of HMO or buy-to-let lenders.
Yeah, so LendInvest have cut their rates a lot on HMOs. They've done well. The one that I personally like is Landbay because they're offering automated valuations, and these
Okay.
automated valuations are great for a customer. We've got 20 applications going through with them at the moment. And those 20, I think 18 have been done on automated valuation. So that means you put your application in, the valuation is done within that application, the credit checks are done within that application, and then it goes straight to offer. And you provide, if you've done your homework with the customer, you provide all the information up front to the lender, and it goes into legal. So you can be in legals very, very quickly.
Interesting.
So yeah, go on.
I guess that probably only work for the AVMs. It's only really going to work for bricks and mortar valuations then for sort of small
Yeah.
HMOs
Yeah,
or
that's
just standard
right.
buy-to-let.
Yeah, there's a number of criteria. But if you've got a portfolio, it works great. You can save yourself a lot of money as well because
Yeah.
AVMs don't cost anything. So they do them. Shawbrook actually do AVMs as well, but
Okay.
their rates aren't quite as competitive as Landbay, LendInvest, Fleet, Paragon, people like that at the moment. Who else is doing a lot at the moment? On the bridging front, Funded 365, they're competitive. Castle Trust, I mentioned earlier, if you're looking for something a little bit further up the loan to cost criteria. Avamore are strong. Glen Hawk are in the market. They're keen to do some stuff. There's a number of lenders out there. But we've been working with our development finance tool, and I think you've used it now, haven't you, Ray?
Yes, I have indeed.
Yeah.
We've got a
So
deal to discuss at some point.
yeah, so on that development finance tool, we can get terms from up to 85 lenders on development finance, bridging finance, land, with or without permission. What else can it be done? Refurb bridges, commercial properties, and HMOs. So it really does cover a lot, and customers can just go onto our website and do their own input their own details, and it comes up with all the terms, and it's such a useful tool. I would recommend any person who's thinking about investing in property to use it because it's free of charge to use.
Yeah.
Give you a great idea of what you can and can't borrow.
Very good, very good. I've got one more question for you. We've talked previously about product fees as well. Have you seen any changes in those? Obviously, we're seeing rates coming down, but what about those product fees as well? Because there were some really, really high fees.
Yeah, it's the same. It's the same at the moment. You can have a lower rate and a higher fee, and vice versa. So it's not changed. The rates come down, but the fees stay the same because it just offsets itself. So it's yeah, there's been no real change in the fees.
Yeah. Okay. Very good. Where do you see the best opportunities right now in terms of the sorts of investment types or opportunities and the sort of the match with the lending products that are out there as well?
I would say with the new PD rights, hopefully that are going to come in, the conversion of houses into two flats. I think that's what some people should be looking out for. It's yeah, it could be a game changer. There'll be a lot of houses being turned into two flats. It just makes complete sense to do it. There's a lack of housing out there. Why wouldn't you do it? And flats can be sold, well, in some areas can be sold a lot easier than a house.
Yeah. Interesting. Yeah. Let's see what happens
And
with
also on that point, they don't require a lot of refurb. When you're changing a house into two flats, you've got a lot less work than changing a house into an HMO. So it may be slightly less profit and maybe slightly less yield, but it's not going to be too far off, and it's a lot less work.
Yeah, potentially. I guess it depends on how many en suites and the rest of it you're used to putting in, because when you're converting houses to flats, you just got the building regulations in terms of this, like soundproofing and fire separation. They can be a little bit more involved sometimes, but generally speaking, shouldn't be too tricky. But let's see what that looks like. I've got one more question for you. Slipped my mind.
I've got one for you. Are you
go for it.
be booking your ticket to go to MIPIM this year?
That's a very good question. So actually, I was talking to somebody just before this recording. It was fantastic. Obviously, we met out in MIPIM last year. It's a great way to meet a lot of people in a very concentrated, period of time. I'd love to get out there. I think probably for a shorter duration this time. I've not booked anything yet, but I think for anyone who's not been out to MIPIM before, well worth it. Obviously, you don't need to have a ticket to enter the actual exhibition itself, but just being there as part of the fringe event is really, really good. Some really quality relationships built there, and obviously myself and Mark met out there as well last year.
Yes, I'll be going Monday to Saturday this year, so got an early flight Monday morning. I fly back Saturday afternoon, so it was really good value actually. £80 on the flights, so
very good.
Yeah, so
and accommodation
sorted. Same place as every year. So that's all sorted for us.
Brilliant. Well, if anybody's thinking of going out there, please do drop us a line then. Either myself or Mark, and if I'm out there, obviously it'd be great to meet up. I did have one last question. Something we're seeing a lot of as well is we've discussed this briefly before, but working with housing associations and supported living. It's something a lot of people are getting into. Some good players out there, some perhaps not so good. But if you're in the space, what does the lending market look like for that?
If you're doing a conversion, so that you're going to be putting people in assisted living, whatever it may be, make sure you've got your exit sorted out, because most lenders don't allow it. It's there are a couple out there, but most lenders won't allow it, especially if the tenant is classed as vulnerable as well. And there's a lot of different groups that can be classed as vulnerable. So it's hard to get a long-term loan. So if you're doing a refurb and you're trying to get it for housing association, whatever it may be, it does cut down the number of options. And if you're thinking about doing it, you're a first-time investor, you're turning a house into a 8-bed HMO, you've got a credit default in the background, and there's various other question marks. Don't do it. Start with something simple. It's just not a good place to be when you've done your refurb and then you realise you can't refinance, or you have to refinance with one of the lenders who is going to charge you basically bridging rates for the long term. You erode all your profit, and just make sure you've got an exit before you start when you're looking at those types of deals, I would say.
Yeah. Okay. So lots of homework for people to do there. Brilliant. Yes. Well, I think we've just slightly shorter episode today. But I think if anyone's got any questions, they want us to cover any particular topics in future episodes, then our contact details are in the show notes. But that's it for me. Any final remarks from yourself, Mark?
No, all good from me. I hope to see everybody soon. Look out for us on social media, Facebook, Instagram. Don't really do Twitter or X, whatever it's called. But please get in touch. Thank you very much.
Brilliant. Thanks very much, everyone, for listening, and see you again soon.
That concludes another episode of Show Me the Money podcast, Unlocking Property Finance. Connect with us on social media, where we share additional tips, resources, and behind-the-scenes insights. Feel free to reach out to us with any questions or topics you'd like us to cover in future episodes. Until next time, keep exploring, keep learning, and keep making those smart investment moves. This has been Show Me the Money, Unlocking Property Finance.